Hi, my name is Amy. Thank you very much for watching and let's make some bad financial decisions together. This is for entertainment purposes only, so if you're entertained, please like and subscribe. I would really appreciate that. So today we're going to talk about the latest gimmick in town, which is QLDY. And from the start, I was pretty unhappy with this ticker, mostly because it pays twice a week, which means I have to now go into YieldMight and accommodate this ticker. And I think that paying 2 times a week is an actual gimmick because, well, it is true that the more you compound, the more frequently you compound, the better your overall returns are. However, as the time period becomes less and less, the benefit of it becomes diminished. So when you go from paying a dividend yearly to quarterly, the impact is huge. When you go from quarterly to monthly, the impact is also very big. When you go from month to every 4 weeks or from a month to every week, it's really not all that much. So I am mostly just unhappy because of the amount of work they're putting me through. But I was watching Todd from Unconventional Wealth Ideas, and he said this will actually be really good for those that have margin. And that I can agree with, especially if you are reinvesting the majority of this, because it does pay twice a week, so your portfolio won't go down as much every X dividend date. So actually, I want to show you, because I was also not happy because when it launched, the day it launched, they didn't have the distribution schedule out, but now they have the distribution schedule out, so now I can go ahead and make the changes to YieldMight. So how it's going to work is the Tuesday is declaration date for the first payday of the month. Thursday is the second declaration, did I say month? Week. So it declares on Tuesdays and Thursdays. So the X date is on Wednesdays and Fridays, and payday is on Thursday and Monday. And what that means is from the declaration on Tuesday and the pay is on Thursday, for Robinhood, I get paid Thursday night, which means I can then, because this is also the declaration date, on Friday, this should be relatively cheaper than it was on Thursday, so I can reinvest this pay that I got from QLDY back into QLDY for a better price on Friday. The same thing for Thursday, Friday. I get paid Monday night. Then we have Tuesday, but then the exit date is on Wednesday, so you can have it float in there for a day and then invest it on Wednesday. So this will work out pretty well. And also, I'm not sure if this is a Robinhood thing, but I don't actually get paid on Monday night at all. So I might actually get paid Tuesday night from this payable date on the Mondays. So then I'll just every X div date use the money I just got paid from the fund. Whatever portion I'm going to reinvest, I can reinvest. And even if I don't reinvest, if I just let it pay down the margin, well, the pay from the declaration hit my account the same day as the ex-div date. So my account, the balance of it shouldn't go down unless, there's market things happening and the actual stock price goes down. But overall, this is interesting because if you've been on YieldMight, you know that you can basically get paid. Well, okay, so this is YieldMight.com, and I just went ahead and I went in the select the underlyings. I picked the NASDAQ 100. So you can get paid on Wednesdays with triple QY, QDTE, and QDTY. And on Thursdays with TQQQY, which is the Granite shares leveraged. So basically, well, if you are not focused on the NASDAQ 100, you can put your money in like WPay and then pick your poison for Tuesdays and something like a YMAX on Wednesdays, and then on Thursdays YSPY or TQQY, and then on Friday you can choose your poison for this, and you can get paid basically every day of the week. However, when they're in different funds, the amount that you have in each fund is less, so your distribution is less. With QLDY, you can have whatever you intend to have in high income ETFs in QLDY, and you get the full distribution every distribution. However, because it is paying so often, I am going to go ahead and assume that they have to keep back more. So what is the distribution rate going to be that I am expecting? I am expecting this distribution rate to only be around maybe 10%, 10 to 15%. If it's 25 or more, there is something going on, and I don't think I would trust it as much. But the actual strategy for this is they buy a deep in the money call option that is very well correlated with the underlying. So that's how we get the stock price of QLDY to follow the actual NASDAQ 100. And then they do put spreads that have 0-day expiration. And so basically they sell a put and then they buy a put that is at a lower strike price. And the difference between that, they got more premiums than they bought with the put, but it also limits the downside that we have on this. So I think for the most part, this will be a really neat fund to look into, to keep tabs in. I wouldn't be surprised if people are disappointed with the yield. For myself, I have challenged myself to just stick with my rules for my portfolio for the rest of 2025. I have my table of the things that I want to get into, but once I'm through with YMAX, and I haven't actually invested in T-SPY, SPY-I, or WPay yet. So depending on how QLDY does, I might replace one of these with that. Maybe the SPY-I or the WPay, honestly. But for the most part, it just depends on how much the distribution winds up being, how steady it is, what's the NAV erosion like, and I need to wait for long enough that this is not 100% margin maintenance, because new funds that just come out, they are at 100% margin maintenance, and then after they've had a few distributions and they get reassessed by the broker, then the margin maintenance for it will go down. So I'm expecting this to be around a 25% margin maintenance. So if it can have like a 15 to 20% distribution rate, the NAV doesn't go down too much, and it has a 25% margin maintenance, and I have 100 shares of YMAX, then I will personally look into QLDY seriously as something to either replace T-SPY or SPY-I or WPay. And this is about QLDY, but the reason why I'm thinking it might replace WPay is that WPay only has like a 50% distribution, which when you say it like that, it's still good, but WPay is leverage. And YMAX gets between 40 and 50% distribution, so without it being leveraged. So it's like pick your poison. Do you want to be in something that's leveraged, that I believe WPay, all of these are actually pretty good stocks, like Netflix and Robinhood and Coinbase and Microsoft and Strategy and Palantir. Like they don't have Murney, honestly. So I don't know. I'll figure that out later. This is actually about QLDY. So I think that this is a strategy that we've seen over multiple funds. Doing put spreads works. Defiance has kind of, they made a mistake at the beginning and they've changed their prospectus and now they are recovering the reputations. So I just think that this is a neat fund to keep your eye out on. I'm not sure if I'm not going to jump in right away. I think maybe give it 2 or 3, 4 months to give it a little bit of history. I will try to keep up with the distribution information in YieldMight. It is listed down here. It is an upcoming fund, but I do have to get the semi-weekly displayed in here, like hook up the back end logic so that we can normalize it to weekly, monthly, and annually. So yeah, what do you all think about QLDY? Is this something that you're excited about? Will it replace your other broad market allocations for your high income ETFs, or do you think it's too tricky and you're going to stick to ones that have more history? So thank you, Shane, Bill, Pedraic Spalding, BGP Automotive, in my opinion, Jetta, and Omega Werewolf X for making your bad financial decisions with me and being members. I really do appreciate you, and you're really helping me make this a sustainable lifestyle choice of doing YieldMight and all of these projects full time. So I really do appreciate you all. And that is it for me for today, and I will talk to you all later. Bye.